Welcome back. In today's video, we got a lot of news to cover. From FTX potentially going under to Meta laying off 11,000 employees and cutting costs across the board. So let's not waste any time, let's get right into it. So first off, we have a lot of news that the crypto trading platform, FTX, is potentially going under and having massive liquidity issues. It all started with the CEOs of FTX and Binance going at it on Twitter. And when the CEO of Binance said that they would sell all of their FTT tokens, which is FTX platform's token. This brought up a lot of concern from people who use the platform and who hold the FTT token because this could cause a lot of liquidity issues for FTX. And then within the same day, there was news that Binance would be doing a strategic buyout of FTX because they could not support the business and the withdrawals amount. So Binance was going to bail them out. And then after that, there had been news that Binance had backed out of buying FTX and would no longer purchase the exchange. And during this whole ordeal, the CEO of FTX, Sam Bankman-Fried, had been completely silent. That was until he left a long Twitter thread in which he apologized and explained some of the situation and what's happening right now. But then he leaves a note at the bottom saying that anything that he said within the thread is not their legal position and that he may have misremembered things and that all the information is not entirely the full story. So in my opinion, if you leave that many caveats behind what you say, then just don't say anything at all. And I also think that people just need to stop listening to this guy because he clearly thought and said that his company was capable of handling these tough, challenging macroeconomic times with other companies like Voyager and BlockFi having a lot of troubles and needing to be bailed out by FTX, but yet now he finds himself in the same exact place, not being able to cover people's deposits and not knowing the true leverage that was within the business. Now this news came as a surprise, as FTX was very public and open about buying exchanges like Voyager when they're going through tough times. And their CEO, Sam Bankman-Fried, went as far to say that they are not concerned whatsoever with their position. Now at the end of the day, this is just another example of how crypto is full of so many scams and how companies like this should not be trusted to hold your coins. It also emphasizes the importance of taking your Bitcoin and any other coins that you have stored on exchanges and moving them to cold storage wallets. Because when you hold your coins on these exchanges, they will lend them out and earn a yield that could come at a massive risk to you. And FTX is doing something very similar to that of what big banks do, like Chase, Wells Fargo, and Bank of America. But the reason this Ponzi scheme doesn't work is because they do not have the backing of the federal government and the central banks. When you try to play the game of fractional reserve banking with a scarce hard currency like Bitcoin that cannot be printed at the whims of any political regime and requires actual proof of work and hashing power, then this is often what happens. And unfortunately, a lot of people get caught in the midst of it and will learn their lesson the hard way by losing a lot of their money. So just to double down on this comment, if you're investing in any type of cryptocurrency, it's really important that you get it to a cold storage wallet and you're not letting an exchange hold it for whatever type of yield they're offering you, because there's a lot of risk behind the scenes that you're not aware of. And if you don't do this and refuse to eliminate your counterparty risk, you will continue to be a liability on someone else's balance sheet and eventually a victim of the credit-based fiat system. Now moving on from that, we also had an announcement from Meta saying that they're coming out and going to eliminate around 11,000 employees, which is around 13% of their workforce. Now Zuckerberg sent out a letter to which he said this: "In this new environment, we need to become more capital efficient. We've shifted more of our resources onto a smaller number of high priority growth areas, like our AI discovery engine, our ads and business platforms, and our long-term vision for the metaverse. We've cut costs across our business, including scaling back budgets, reducing perks, and shrinking our real estate footprint. We're restructuring teams to increase our efficiency, but these measures alone won't bring our expenses in line with our revenue growth. So I've also made the hard decision to let people go." Now that's a lot to unpack, but I think to sum it up in a more digestible way is that Meta is cutting out a lot of the bloated parts of their business, in which they were hiring too many people and spending money inefficiently. He also stated that they will be focusing their capital and resources towards the items that they think will bring the most value to their business within AI, ads, and their long-term vision of the metaverse. Now shares have shot up upon this announcement, being up nearly 20% on the week, as many investors, including myself, are pleased with the refocusing of the company. Now to be clear though, layoffs suck and I don't want to see anyone get fired. But when companies like Meta double their workforce in under 2 years due to unprecedented macroeconomic events, there is a level where it is unsustainable and it doesn't make sense to have that many employees anymore as that demand tapers off. And although Meta is mainly to blame for these mass layoffs, we must consider the fact that they most likely would not have been put in this situation if it wasn't for the massive Federal Reserve and stimulus packages during 2020. And then now we are facing the repercussions of these poor policy choices. And who knows, it is very possible that the Fed may raise interest rates too high for too long, which then forces more layoffs, causing more pain until they inevitably pivot again and start the cycle all over again. And to wrap this video up, we also had the CPI report, which reported inflation coming in around 7.7%. Now, since that report came out, we saw a massive rally in the S&P 500 and the NASDAQ, with the S&P 500 up over 6% this week and the NASDAQ up over 7%. And with inflation coming down, it is clear that the market was very pleased with this and thinks that this may lead to a lower terminal rate or possibly even a pivot in the near future. Now, personally, I don't think anyone knows what the Federal Reserve is going to do besides the people who sit on the board. But what I can tell you is companies that invest their money wisely and get a good return on it will continue to be a good investment. And that as interest rates continue to rise or continue to fall, it's important to buy good companies at good valuations. And that it's easy to get caught up in the macroeconomic events and all of that, but that may not be the best way to choose your investments. Now that's all I had for today's video. If there's anything you take away from this, it's to get your coins and Bitcoin more specifically off of exchanges. You do not need the yield that they are offering you. And when you hold an asset like Bitcoin, which is scarce and a very hard currency, over long periods of time, you will not need the small amount of yield that FTX is offering you. It's not worth the risk. So with that, I'll see you in the next one. Thanks for watching.